We are a boutique investment bank and private equity transaction sponsor. We're a fundless sponsor, and we have a very large operating executive network of CEO-level women and board members. So about 500 CEO-level women, C-suite, if you will. About 70 of them are sitting CEOs, and about 150 large company public board members. And that's our collaborative platform. And now the idea when we started Hypatia Capital was really that we just wanted to have female clients. And we were going to go out and build a network that would allow us to do so. So we did, very successfully. And it's bearing out the research that tells us that balanced leadership outperforms. We've found situations where these female CEOs really don't have any coverage from the private equity industry. And I can assure you, if they were male, they'd have plenty of coverage. So that allows us this advantage to become close, or to develop this relationship of trust in an environment where there's not a lot of competition, which we love. When we started, we knew very few women, right? So we weren't necessarily finding deals right and left, but when we would find somebody, we'd go and partner with a larger private equity firm, and we still do that today. And I think over time, many of the firms that we interact with on a fairly regular basis have come to see, like, wow, Hypatia brings us really high quality deal flow and executives, and they want to know what we have to say. And it's usually a fairly proprietary situation because we usually have a very early look at a lot of these situations, right? It's very different to get the sales memorandum from Hula and Loki saying, you know, and you got it and 40 other PE firms got it, than for a CEO to tell you, look, you know, I think we're going to go to market a year before we thought we were. What do you think? It's a more competitive situation on the right side. And it is not inside information. It's not a fact. It's not results. It's just, hey, you should be thinking about this. So this is now my theory. One of the reasons why we might have 3% only female CEOs in the Fortune 500 and the Fortune 1000 is because if you're on the nominating committee of a board and on the board itself, and you have this fiduciary duty to your shareholders to make the best decision, that comes with, you know, by definition, you're trying to minimize your risk. And so the unknown is always riskier than the known quality. And it's just, if you have, you know, 97% or 99% of all CEOs ever have been male, by definition 1% is other, right? So the risk, whether that would bear out with the data, which I doubt. Actually, I know the data doesn't bear it out, but people don't always evaluate risk through data. They evaluate it through, you know, I guess the buzzword today is implicit bias. It's just riskier. So our theory is that perhaps we don't have the same we aren't as biased implicitly as maybe some of our male counterparts are for some of these CEOs that are female.